Well, what's your view on the markets in Nigeria at the moment and the kind of activity we're seeing on that end?
Good morning. The main activity in the market is in the banking sector as usual. Over 70% of the volumes in the market yesterday was banking sector, as it has been since the beginning of the year. The real movers have really been staying West Africa in the construction sector. Also, Stanbic IBTC did quite well yesterday. While on the loser side, we had links like Alumaco and eTransact, which suffered some losses and the price lost yesterday.
Let's take a look at that sector that's, of course, still in the spotlight, the banking sector, as you say. To highlight is that a lot of these banks had been heavily sold off to start off with. The buyers are now coming in to find value at low levels. Fringe players and even speculative stocks starting to gain traction once again. But seeing that the market is pretty easily spooked at this stage with a lot of uncertainty surrounding the banking sector specifically, do you see the gains on that front being sustainable?
I think going forward, yes. The only real aspect that might affect that is the common year end. We expect results to start filtering from end of next month to March on the end of year end, and that's when people will get a much clearer picture of where the banks stand. But I think at the moment, with a lot of rumors about international investors as well as some of the local banks looking at each other in terms of merger and acquisition activity, not only just the 8 banks that are going to be recapitalized by CBN, but some of the other players are also in play apparently. And I think that's generating a lot of interest in the sector, and a lot of people are taking positions in that end. I think coupled with that, yesterday the stock exchange announced cuts in charges for bond issuance. I think because a lot of banks have stated they want to issue bonds this year, I think that generated a lot of interest because the incentive now is for them to issue those bonds with the cost of those bonds going down.
In the meantime, we've got sectors like the food and beverages sector and also the building and material sector on the upbeat as investors try and secure, areas that they're more comfortable with and where fundamentals are illustrating already. How are you viewing the building and material sector at the moment?
A bit of the material sector, and there's quite a lot of interest. I think Dangote Cement made an announcement last week about their refinancing of they had a $1.2 billion facility with some local banks, and they've paid that back, and about $350 million loan from Standard Chartered helped them refinance that. And they've also stated their objectives to get a bag of cement down to 1,000 naira. I think that's engendered their competitors to strive to reach that price as well. I think when you start seeing price of cement down at 1,000 naira, I think that will hopefully generate more interest in the building industry and to try and meet the massive housing deficit we have in Nigeria. Mm-hmm. It's estimated we have a housing deficit in the millions of houses. And I think once you have cement at a more affordable price, you see an increase in that sector. So companies like, especially in the material sector, like Dangote Cement, especially if they're going to list, which is speculated they will list this year, I think you'll see a lot of interest in that sector. But the construction companies also do quite well, like Julius Berger and Costa in West Africa, who have quite a good big stronghold on the sector, will do quite well.
If we look at the cement players specifically, we've got Ashaka Cement, CCNN and Lafarge Cement as well that stood out particularly in yesterday's session. What would be the stock pick out of those 3 for you, if any?
I think out of those 3, I think Lafarge Cement really. Lafarge Cement already have a massive plant in Ogun State in Nigeria, which they're expanding. They had a facility they've done with a consortium of local banks to increase their facility to take up more of a stake. I think the combination of the local footprint with the international experience has shown them to be a very good operator, even in difficult times in Nigeria. And their movement towards going for cheap gas to power their plant is going to stand them in good stead. So I think Lafarge Cement is a very good pick there. The other 2 will also be reasonably good picks because in reality, there's a lot of construction work that would need to be done in Nigeria in the space of the housing deficit I talked about, also in infrastructure. There's going to be a big push to improve the infrastructure in Nigeria, and cement is going to be a key ingredient for that.
Let's take a look at a sector that we don't usually look at, simply because fringe players in other sectors have also been stealing quite a bit of investor attention. Ikeja Hotels, I mean, it's not a stock that we talk about very often. Run us through some of the investment merit that it boasts.
Ikeja Cement has been here for quite a while. I mean, they have quite a nice portfolio. They have Sheraton Lagos, Sheraton Abuja, and quite a few of those facilities which are good properties. I think the problem Ikeja Hotels have had is really in trying to upgrade the hotels, because 4 or 5 years ago there was less competition in the hospitality space, especially in Lagos. And so Sheraton Lagos had, especially in its prime position on the way to the airport, had a really good position in the market. But we've seen in the last 5 years 3 or 4 quality chains like Southern Sun, Echo Hotels has renovated, and we're expecting Intercontinental Lagos, and 1 or 2 other hotel chains arriving in Lagos, and so the competition has increased. I think what Ikeja Hotels are trying to do is try and raise some money to renovate their hotels and put them back under that pedestal, so when they with the increased competition, they continue to do well. I think the issue they have right now is they're trying to raise that money to do those renovations. I think that they're trying to, but with the current credit crunch we're experiencing in the sector, it's a bit more difficult than usual.